When is a new imbalance confirmed as a potential supply or demand zone? There are two scenarios and one clarification. We will talk about it in another video. There are two possibilities only. A level will be valid if it takes out its opposing zone in the same time frame where it's been detected. And also it will also be valid if it breaks a trend line in the same time frame where it's been located. Those are the only two options where a new imbalance are confirmed as supply or demand zone. We are not talking about this lesson where we also need to take into account the things like features like the departure, profit margin, the big picture, multiple time frame analysis, number of retracement, that is the freshness, the retest of the level, time spent at a level, arrival, location, etc., etc., etc. These are auto enhancers that we need to take into account. We are not talking about that. We are talking about the lesson where we confirm when a new level is when an imbalance, potential imbalance, becomes supply on demand. They become supply on demand if and only if it takes out an opposing zone in the same time frame where it's been detected, or it breaks a trend line in the same time frame when it's been detected or located. So let's take a look at the charts. This is the Oxygen daily. Okay, so we always have to use trend lines to assess our direction by connecting the latest two peaks or valleys or three or more CPs in the same direction, continuation pattern. So once the trend line is broken, we've caught a level. That's like that. Okay, always. So if we start drawing trend lines like this after 1, 2, 3 CP patterns, okay, we've got that trend line. That is a level of supply. Retested after the break of the trend line there and then dropped. This area over there is a CP, and I removed that area of demand. So that is another area of supply. Okay, so now that we are dropping and dropping and dropping, we take into account the removal of the opposing area. So this level of demand took out this area of supply. So this is demand. Okay, this is demand. So the trend line break is one of the two reasons why an imbalance is validated. So we keep on drawing trend lines like that, then we adjust it to the latest imbalance, then we've got demand on the daily. Okay, then we keep on rallying and rallying and rallying, and we've got this trend line that later we need to adjust with this valley. We've got that area. I'm doing this fast. Okay, this is supply. This is now also supply because it removed this area of demand. Okay, so now if we do this, if we continue now, as you can see, this on the Oxygen, we connect the latest imbalances and all that. Then this is supply, etc. And if we break this area, this trend line, the level that is created right here, okay, if we break this trend line, then this level will be validated. We are talking about trend lines only here. We are talking about the second point. It breaks a trend line. So it is not, you have to look back in time, but you don't have to look at the origin of the Big Bang in order to locate imbalances. The trend lines serve as a stop. Okay, you stop there because there is a trend line break, then the market dynamics change on that time frame. You need to wait for a higher time frame area in the same direction that is still in a trend in order to continue buying. Okay, so price rallies, breaks trend line, and drops. Okay, price drops, and we have not broken a trend line yet. So there is no level of demand down there. It is down there. It will be weak and all that. Those are the things that we need to assess as per this lesson. How to validate. A lot of time at a level, time spent at a level, the basing is not correct, to wiki, reaction to a previous level, etc., etc., etc. So that is another lesson. So we're talking here that the break of the trend line makes a valid area of supply or demand. Then we've got that if we've got this area of supply valid, if there is an imbalance that breaks this area over here, then whatever happens, if this area of demand, potential demand, would have done like that, then this would be considered demand because it broke this area of supply. Valid supply because it broke the trend line initially and then it also removed one area of demand. So this area is valid because of these two reasons. It took out opposing area and also it broke trend line. Both options are valid on this one. That is the trend line break. Okay. Then we've got, let me remove these objects. Then we've got the first option, a scenario. It takes out an opposing area. Okay, if we are talking about demand areas, we need demand areas to remove opposing areas of supply. So if we draw again these trend line over there, and then we adjust it to that area, this area over there, okay, is demand. This area over here is supply. Why? Because this little area over there, see this peak there, let me use another color instead, took out this low, this area of demand. Okay, and also this area of demand was demand because the trend line was broken. So now you've got the valid area of demand, supply, sorry. So if this is supply, okay, then this is demand. So same here. If we draw the ascending line over here, and this is supply, okay, and also this is supply, this is supply, this is supply, okay, supply. All these areas of supply will tend to be removed if a higher time frame area of demand has been taken out and the trend line is broken. So when these areas are being removed on the way out, there are areas on the way up, like this one, that removes this area out. This one removes this area out, and also this area, and also this area. This is a powerful area at the moment. Okay, so this is what you have to do. You have to be doing that all the time. You look left and see if the imbalance of demand, potentially demand imbalance, has taken out previous area of supply, or the origin of the move of the break of the trend line, which is also supply. The opposite is true for demand. Okay, for demand and supply. Yes. So here we've got that trend line. We have also this area of supply, and then we've got demand, okay, and demand, and demand. So this area of supply here took out this area of demand, but also broke the trend line. This is valid by two reasons, okay, these two reasons, first one and second one. So this area of demand was taken out by which area? This one area over there. This is the area that dropped and took out that area. This is the area that took out this one. Then this one was already taken out by this one. So this is supply because you removed this one and not because you removed this one. This one had been previously removed by the upper one. Okay. This one, demand. Look at this. Let me clear this a little bit. This is supply that dropped and removed that area of demand. Valid supply for a short. Okay, so on and so forth. So as you keep on dropping, this is another area removed by this area over there. So I took that trade. You know that one if you are being following me. So I took that trade because of that. So this is the way how it works. And it works the same way on all time frames because price, remember, is fractal. So whatever happens to one time frame, the rules that apply to one time frame apply to all the other time frames. So why do you think now price is reacting to that weekly down there on the oxygen? Okay, because we've got a nested, very wicky, long tail area of demand within weekly area of demand. Why do you think price reacted to that area over there? Okay, let me draw that area. Where is that area? Look left, and we've got a valid area of supply on the weekly. You see. So why is it supply? Because after that trend line, it broke the trend line. Descending trend line, it broke and also removed that area. So price dropped, and this is confirmed as supply. If we look higher, maybe we will have another area there on the monthly. So we've got a monthly area of supply with a nested area of supply on the weekly, and now nested areas on the daily. So this is how supply and demand works. We also need to apply the fractality of the charts and the price action, and also the realignment rules, how high, how low we are in the curve and all that. So once we are very high, we've got lower probability of longs playing out. Okay, and you use both the trend lines, okay, and the opposing areas of demand being removed by their opposing areas of supply. They are connected. Okay, go hand in hand. Once this happens and the trend line is broken at a higher time frame area of supply, price has higher odds of dropping. There are many other nuances, okay, that we'll be covering in other videos. But this is how supply and demand works, and how the rules at Set and Forget community are laid out. Okay, hope that's clear. Thanks a lot.